Welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Welcome, and thank you for tuning in today. I know I appreciate you taking the time to join us today. Let's have a little look at the markets and see what we're in for this morning. So this morning, on the 15-minute chart, I can just see this rejection block's been hit. Half this wick has been hit perfectly, and we've had a nice little reaction of that. So if that rejection block holds for now, and we get a pullback, I'd be looking for a pullback to these old highs, this little breaker right here. And sorry, I'm just checking for mosquitoes. We had a door open. We got somebody fixing up the basement yesterday, and they left the door open for like an hour. There's tons of mosquitoes around everywhere. So anyway, I'm looking for this rejection block to kind of hold here. I'm probably going to dig back into this BISI, get a little bit of lift from that. That'll be fine if we come back and fill the whole thing right back to this old high here. I'd look for some sort of reaction off of this. If this just sits here and becomes a small little candle, then I want to see the next 15 minutes steer graded response. That's where I want to see the institutional order flow entry drill, 50% of the wick, or 50% of this, 25%, so on and so forth. Although you grade that response on the way down, and you're kind of looking for those lower time frames, 15-second chart, 1 minute chart, whatever, for a reversal. So I'll put it back on 1 minute chart because we want to see on here, there's your first turn, and we didn't quite tap it there. So you look for this one. We're just looking for a return back into this BISI right now on a 15-minute chart. Let's see what kind of response we get. Good morning, Hadi and Ollie. Good morning, fellas. There's our consequent encroachment. So if we just get a small candle, I'm looking at this BISI here and how much of that we come back to, if we come back to it. If we just simply tap that and the next candle opens and starts marching higher, our new macro is begun at 8:50 here. Next 3 minutes. I think we started a little early. Back into this range here. This is all upside that has yet to be hit for me. Back into this breaker. And if we hit 1, 2, 3 levels all in one, we're looking for it to go below here. So looking for this discount box or this little imbalance right here. Is there a little imbalance there? Yes, there is. So we've come back and tapped that high. So now I'm looking for any sign of a continuation to the upside. If not, and we run down through this, look for this discount box down here for 10 o'clock. We've got to get through this level here first, though. Got lots of arrays to reach for before we get down here. So let's just keep it bullish right now. We're inside here. So there's the tap right there. We see continuation on the downside now. Nice. Stop loss be sitting right above that. Order block there. That's the little tab you just go. Looking for lower, stop loss will be here. If you're looking for your internal range liquidity hunt, take profit model 1, pay yourself, move to break even. I'll move this over so you can get a better feel of you've paid yourself once here, or if half your trade is off there, 10% is off there. If you're just using internal range liquidity hunt, that's all. So far, your 50% has not been re-hit. So as soon as it hits 70, you can move to 60 or leave it at 50, whatever you want, whatever modification you want to make to this method is fine by me. If it works for you. So you would just give you a precise entry, or I just gave you a precise entry. I like to use we, it seems more teamworky than saying I. But I did just give you that right there. And you pay yourself, and now we're waiting. If that pops back to 50, take your money out. You've just gained 40 to 8, and 40% of your trade is left. And you're risk-free. You're out. Just tapped you. So that brings us right back into this level, and it taps this old high. So what I want to see now is this pull back and a run higher. So you've got a small little internal range liquidity hunt, and if it starts to close back above this level and this level, then you start to say, I'm going to get back in sync with this going higher. See how you deny yourself if you're sitting there, if that was your entry and you wanted it to go lower, it's come back to your original entry point. So you've had to endure all that little bit of profit, and then you're right back to stressing out over whether or not it was the right trade. If you're still sitting above here and you're happy for getting this whole idea and you want to go to take profit model 2, then you're looking for box to box trading. You take this box, there's nothing in here. You'd have to wait till down in here, here. That's below 50%. Yeah, first one's here. Second, third, all these little spots down here. If you're using a take profit model 2, and if you're using the take profit model 3, just wait for your next opportunity to see a reversal pattern set up. So you're just going from change in direction right here, entry, and wait for the next reversal. As soon as you see the next reversal, close that trade off, and then you can get back in for, technically get back in for a long position in the next range that you're in. So anything below this breaker here is below 50% discount. Good morning, Hans. So we're looking for this to hold, us to get back up on top of here and use it as support. So that level there coincides with the top of the box here. This little busy. If we get up on top of that, find support, take this out. Now you're back on track for going higher. And you want to get back up on top of all this if you want to start seeing that climb higher. So far this is holding. Morning, Craig. Long crude oil again, green day. Well, I want to short new highs indices somewhere. All right, let's go looking through the rest of these little fellows right here. So I'm looking again, looking for this to hold, and that level right there. I want to see if this starts pushing through this little box here. Get confirmation on that, and I'm looking for that to go higher. Let's look over here. Dow Jones. Don't know why it keeps putting this thing up here all of a sudden. Dow Jones is into the rejection block as well. Dow Jones has got its reversal. We've got a tap perfectly right there, looking for a short. So Dow Jones is giving us a short. And why did it keeps putting all these things in here all the time? I don't know why. I never put that buy order in there. I've seen this going across a bunch of different trades. What's going on with TradingView right now? Let me know if you guys are having a similar problem with them. ES still hasn't made its new high. It's hit the rejection block there as well. Right there. And its reversal is sitting right here and changing direction here. And you want to see if we can get through here. Take out this BISI. Start reaching for a market structure shift here. You can use this one if you want. And then start aiming for this hourly down here. If you're looking for a small consolidation to keep occurring in here, you got to clear this and this to start reaching for here. So if we're bearish today, we want to see this level get broken on the hourly. Oil. We are below here. It's got to stay above that on the 15-minute level if you want to keep pushing higher. We've got a little sweep of the lows. We've come back into the discount box. We've come back up to the premium box. We've hit the premium box. 5-minute chart. You want to see that keep pushing higher from here. You see that come back and retest right there. Now you want to see that go higher from here. Right where we're at right now, I want to see that go higher. You've come back. You've got this immediate rebalance right here. You've come back, tested it, went higher, took this candle out with a nice displacement candle. You've come back, you've tapped it. Now I want to see that go higher. And you're through this level as well. So you're looking for your premium box up here, 64.15. So stop loss would be like sitting right here. One tick below that low. There. You're back inside here. You don't want to see that mean threshold get taken. Like right. You can come one more little pop down. You have this change in directions right here. So if it closed, there's your little pop. Ooh, it comes all the way down to here. So it closed. That's it. Yeah, I don't want to see that. You're at 50%. You've got a change in direction here. It's not holding. This could run all the way back. If it's running through here in the 5 minute, that's where it sits right there on that yellow line. If you break that, so the 5 minutes giving you it's, yeah, it's gone through already. So you're reaching for this discount box down here. This could run all the way down into here, and this immediate rebalance. Change in direction. Now traded below that level. You come back into this level. Look for a run all the way down into here now. And if we close below here, going lower. Look for 63.91. There's the recap. Tap in the CB. Get back above here. Use this candle as support, and you can get back up to going for the premium box again. Be box to box up there, that larger range. All right, back on track. Now I'm just changing direction inside this range, and then it changes again the moment we get above here. We're back cheerleading for you again, Craig. Just keep going higher, man. So we had key levels you didn't want to see break. Mean threshold of this candle. It just closed below it. We did get a wick down in there. So if it starts to drive through that mean threshold, look for this city. If it hasn't been hit, look for it to get hit again, and then go higher. On the 5 minute, that's your candle to the left. So there's your mean threshold. It ran through that just to get back to the CB that never got hit initially. Now it's got hit. Now you've got free reign to run higher. But you got to get through here on a 1 minute chart. So you're sitting right on that level, 64.10. You want to see that pop up and use this BISI and this order block to go higher. There's another little imbalance right there. So you got to get above here, push up higher. Then you're aiming for this level, which pretty much is overlapping that spot anyway. It loses its luster for me if we start revisiting this again and again. You start to sideline your idea until you see a significant break in structure. You want to see a displacement candle if you want to see that push higher. We finally have natural gas making a move. We're just back inside this range here though, and you're already at the premium. So what you wanted to see is this pop up in here, give yourself a CAM Model 1 and reach for this level. So you would have got from $12 to $12.20. So you're at 2% out of that in a couple of days, a couple, 3-4 hours. But now it's already gapped up there. So you got to see this level get taken now and find some support at this and start running for this next gap. If we can get a retracement back down into here, you want to see this hold. Your CAN model 1, CAN model 2, and then if you go through 50%, they're running for the lows again. It's the same one. Oh yeah, we were just using this for Bitcoin. Remember being inside the sticks. We're talking about being in the sticks. So we bounce around inside there. Now where do the sticks go? This is nice. Keep lifting on. Right there. We're stuck right on that level right there. And if you drop back, you'll see where it is. Right here. See that? You want to break through that? Use that and this breaker. They're overlapping them. So you want to use the breaker to get above that and use some support to push higher. And you're reaching for a higher time frame objective. Look for 4 hour up there, or look for this next fill of the fair value gap at 114,258. Bitcoin. Got to get up on this step. See how this step, we got up on top of it, found support. And you want to get up on top of this next step to get to the ledge, get your liquidity up there, and we'll see how it acts up there. Just pop up to the rejection block, roll over and come back down again. You want to see this level hold. These equal highs here. You want to see this order block hold. If that gives way, then this is the last line in the sand, and then you start to run back through all this again. Gold. I don't know if VK is in here or not. What's your crude upside? What's my crude upside? You see how that's not looking good already? It reversed on you. You've got to get back through that level on the close. It just came back, tapped it, rejected, came all the way down to this area that wasn't touched it already. It's hit it now. Now you've got to do this, start this all over again. You've taken out a couple of little tiny swing lows here. It's got to get above right here. These two candles just continue going higher. Otherwise, this candle here acts as support to roll over and come lower. So you wait, push through here. There's your fair value gap. You've traded above that. Good starting. Come back here to tap all the way into here, all the way down to here. So this could come all the way down to there. And then you want to see it close out above these highs here and start pushing through this next level of support. And my upside would be $64.45. Then $64.90. Let's see if we can get up there. All things being considered, we got to get through this breaker on a close and use this as support, this little area right here, that big candle as support to go higher. Otherwise, you're bouncing around inside here. with no real place to go between here and here. And that you're just stuck in this little range right now. So you need to see it bust out of there. Right now, you're still bullish. Overall, you're still bullish in this little area here. Because you just come down and filled that, you're above that level. You've come back into there. So if you start closing below that little imbalance again, you got to stay bullish all the time you're above here. If you start popping below that, it changes up. You start changing the mind. Gold. So VK, if you're in here, morning, Derek. $64.40. Yeah, that's good. That's where I'm looking. So VK, if you catch this or watch this video later last night, you and I were discussing about gold going higher or lower. And at 44.4 level, I wanted to see it get above 44.40, 44.44, 44.4. Right there, see 44.4. It had to break through that to start reaching for these lows. I know you wanted it to go lower, but I had to break through that, and you already saw this get attacked already. So when it started to run back through that, you think, okay, it's going to retest this, and now I want to see if we break below here. There was a couple of little pops below, but as soon as it runs back higher above it again, then you're gonna, it's that whole below, above, below, below, above. So if you wanted to go low and it hit here, and then you saw it trade above, close your trade, and then wait for market structure to shift above or below. Don't keep trying to attack this level anymore. It's still a key level, but you have to look for the high and the low. Otherwise, you're just going to get beat up in one level here. So you've got this level and this level. So that support's going lower. Then you see it pop through there again, and you go, oh, good, now I can go lower. It comes back, taps you, and then runs through your level again, and you go, I got beat up twice now. That's why if you lose it once, move to the sidelines and wait for a market structure shift above or below the market to look for your confirmation of where you want to go. So there's your market shift above. Here's your one below. So you wait for this. It trades above it, comes back inside, breakers, key levels, mean threshold, hits it, hits an old high, comes back towards this old BISI we had sitting right here, gives you your nice touch, and then proceeds to take out the high, comes back into the BISI one more time, old high, like it just did here, old high, and continues to go higher. So now you're off your whole idea of going lower because market structure shifted to the upside. Does that make sense? And then it shifted all the way up here. You got a change in direction, market structure shift, trade it below it, then you go, as soon as it trades back into this right here, I'm short again. I'm not long anymore because we have that shift in structure and back to this order block and go lower. Hopefully that makes sense to you. Little piggies, look at them on a run on a 4-hour chart. Looking good. Now, if you went back to that old chart, we were looking for that big old projection up there. If you went back to the September contract, I think you still saw that upside objective we're looking for. We've probably hit it already. I don't know now, so I can't really say. Sugar still stuck in the sticks for weeks here. Coffee broke above this level. We've come back into this level now. We're finding support there, and you've got this. So if we start popping below here, now that we've taken out this low, I'm looking for a run back into this SIBI here or this SIBI here. In a little consolidation, so I'll be looking for a run back into old highs, mean threshold, SIBI, box to box, whichever method you choose to use. Disney pre-market is still sitting here. British pound I've got There's an objective is down here in the 185s, 185.5 to 185.1. These guys have closed above my level here. So there's your last line in the sand there. Close above that, you're into rejection block. I think we've just cleared out those highs now. What's the high on that candle there? 11.97, 11.98. So we went 1 penny above that high already. So if that pulls back, starts closing below these levels one more time, creates its own little fair value gap, then I'm looking for another run back lower into this imbalance here for Ford. Dodge, still looking for Dodge to get down into here. Looking for next upside carrot in silver. Got our change in direction that hit the upside objective we were looking for. Just cleared it. And then we're back inside. We've tapped it. I'm looking for lower prices than that. I want to see PCE get down into these lows. I'd love to see it take out in October, take out all this lot. Give a little run on that. Pick that up for 28 bucks or something. And cash that for a loan. And take out these relative equal highs above us. That's what I'd like to see for October. I got my October deals. I'm already lining up already. These guys are doing awesome. %, still doing awesome. I picked this up way down here. %, and it pays a 20% dividend. Awesome. Banks. Look at the banks. Take off to the Great White North. Take off. They're all on a nice little tear up. I love it. So Bank. Oh yeah, Bank. I was going to say Bank of Montreal is sitting in the dirt, but no. Bank of Montreal took off as well. Doing great. Oops. This is our Marky Mark 3-hour candle. I was looking at this earlier and I was thinking, if you take that 3 a.m. candle, what do you see so significant about the 3 a.m. candle here? So I went from the high to the low, 3 a.m. candle. So look at the 50% mark. Look at how sensitive that constant encroachment is. Mark's probably just going, yeah, no kidding. Look at this. You see that? Then it trades through it. Look at it on the other side. Tell me 50% of the 3 a.m. candle is not a critical level. And then you come back. Then you finally run through it. And look at that. You came back, just perfectly hits it and leaves. Crazy, hey? I'm taking a shine to Mark's 3 a.m. candle now. That's the tap we were looking for. I want to see that continue going higher now. How's the oil going now? Did I leave it? No, it's still sitting down at the bottom, the discount portion of that range. And you shouldn't have seen this. There's constant retapping of this. If this was bullish and it was stronger bullish, you would have seen that come down, tap this here and leave. When it started doing this, these candles again, it's like, wait a second, that's not acting the way I want it to act. Okay, so we'll give it some leniency to move into here. Now you want to see it start to explode. So it gets above here and then fails again, drops down into here. Now that whole side collapses. So now that bullishness collapses from there, and then you start to roll through it. You come back into it, and now we're in the bottom half of this. So you've got to get back above all of this to even consider that going higher. And you could say, yeah, there's lots of relative equal highs above you here. That's true, but that could quite easily just keep rolling over and coming lower. So you want to see some legs out of there, Craig. Still moving higher, takes the high, pay yourself, move to break even, risk-free trade now. Let's see if we get a reach up into this premium box here. The one we've been looking for forever, this 4 hour. I just missed that by a couple of minutes, too busy talking. But gave that to you as well for you to wait for and take. If you took that there, you have a risk-free trade on now. You paid yourself and you're at break even. Just let it run now. You're aiming for this first objective or next objective here at 661, 662, and then 667, 677, 687, 688. And if you can get through it on top of that, you start running for that weekly, new week opening gap again above you. So I've given you several key levels, perfect levels for entries. This is acting exactly as you want it to act. Tap, go. None of this flippy, floppy, flopping around crap. Tap it and get the hell out of Dodge. Take the high, move to break even, pay yourself. You've made some money. If it switches back on you, you've got a little bit of cash out of that. Okay. And don't chase your stop loss up now. Just wait for your next objective to give it some legs. There's a little imbalance right here. If you start to trade through that imbalance and to that one, you're coming back inside this range. And you want to see that hold. You've already paid yourself. It's all greed talking to you now. It's like, oh, keep your money, keep your money. Let it ride, and then snap, comes back at you. Because 930 is coming. So 930, you want to see 930.10 take this high, and we could get another retracement back in here. So you're looking for, if you're those of you who are looking for a short, you're looking for a break above here, a tap of this level right here, and then a reversal. And you got to get back through this level right here and this candle to really get me bearish until, if you want to go back down here. Today I will trade an index like y'all. Little piggy's hitting my target. Excellent. Craig. Every instrument has its own personality. Use the lowest possible leverage whilst you get used to it. Have fun though. That's true. I was in long on MBT, Bitcoin around 10 p.m. Eastern time last night, but was stopped out because my stop loss was too tight. It made a nice move up. At least my bias was correct at the time. I like the way you're thinking, Russell. I like the way you're thinking, man. Support that idea. Positive things for your brain. You got the right idea. You got the right direction. Stop loss is all something you can work on later. See how we've traded below that level right there? And now we're tapping it, looking for this to come lower. There's another little tiny imbalance up there as well. So now if you're using your take profit model 2, you're out of your trade right there. So you got your entry right here, you're out right there, you've paid yourself there. You wait now. It's 9:30 coming up. So you move to the sidelines and wait. Or if you're super keen, that's a short there. If it gets back above your rejection block, then you're on the wrong side of it. I wouldn't touch it yet till 9:30, but that is another short. Pull your fib tool on there. Internal range liquidity hunt if you're doing that, or if you're pulling a larger range, just remember there's multiple swing points along the way on the way down. So if you're entered in there, 50% of your trade, take half of your trade off, move to break even, and you wait. You're a risk-free trade into range liquidity off the first swing. If you hit 62%, move to 50. Right there. Now move to 50. Pay yourself there. So 40% of your trade is off. Take another one. There's 70% of your trade is off. You now move to 62%, and you just got tapped out. So you're done. There's a little internal range liquidity if you went in there. If you're looking for the larger range, you haven't hit 50% yet. So here's what we're going to see what happens if you would have chose the larger range. So if your entry is right where we talked about, right here, it's a perfect entry, by the way. And then you're looking for 50%. You want to catch that first part of the larger range. If you hit 50%, take half of the trade off, move to break even plus the cost of the trade. You're at a risk-free trade, internal range liquidity, and it's 4 more minutes. There you go. There's 50. So you actually break even. You take half your trade off from there. So you're 53 to 44. So there's almost 10 handles there. Now you wait for 62%. See how that level gave way? This one, tap it, run lower. Next one is right here. You traded below it, you came back up inside, you tapped it, you went lower. Now here's 70%, 62. So now you're moved to 62%. You take off another portion there and another portion there, and you're out. Just came back and took you out. So your larger range would have got you to 70%. Pay yourself. If that reverses on you and goes back up, you got a perfect entry, perfect exits. And now you wait. See it snap back a bunch of times to get you. That take profit model through one is a great way to hunt internal range liquidity and quickly save your trade or protect your money. 726 upside target on NQ. Yeah, don't overreach your targets just yet. Wait for you. Make sure all your PD arrays are taken out. 762. Oh, you're way up here, hey? Yeah, there's lots of PD arrays for that to reach before getting there. We can see we're on a turn already and a tear down. So now I'll wait for market structure shift. So you've paid yourself all the way in here, wait for structure shift. And if you're beating yourself up because you're missed out on that, there's nothing I can do for you. Just wait for a market structure shift, get patient and wait for this breaker to get retested and go lower. This is another rejection block. It's high into the rejection block, but you're still inside that. And it's rejecting off of that. So now we're looking for a return back into this order block. Wick, old high, wick, mean threshold, and then a hunt for back down in here. We want to see a market structure shift for that to happen though. If it doesn't, we just get rejection block, higher time frame rejection block, lower time frame rejection block. We tap that level right in here. Now I want to see that snap back and keep coming lower. All the way up into here, or here, or here. So that whole candle right there, acting like a breaker that takes out these highs. I want to see this. It's almost buried inside this one here. But we do have a swing at this point. Let's see if this goes lower. See, there you go. Ooh, took out the lows. You gotta be quick to pay yourself there, man, because it just came back and snapped you up. There we go. Look at that reversal. That's why you pay yourself on the way down, man. And see how quickly you have to pay yourself for the next low. Tap out, and it came back, and she's on a tear. So now Russell's like, I told you it was going to 762. Finally hit that level. Oh no, so 726. $726. Why 726, Russell? What's sitting there? Something I haven't marked out yet. Come on, Russell, hit it, man. Whatever it is you're looking for, I hope you get it. There's 720. Oh, 1 hour fair value, yeah. Okay, let's have a look at that. So you're inside this one right now to 729 to 709. Oh, you're already through that already. Oh, we're through the 726, man. 734. So you got your objective hit nicely. So here's our next breaker, 736. So we're sitting around 734, which is the bottom of this last down close candle, which is a mitigation block. Depends how you look at it, I suppose. If it takes out that little swing point, you say that's a breaker. If you hit that, now if we get a reaction off of that, back up inside the big breaker that sent this sucker lower. There you go, Russell. I gave a hint on Telegram channel. Oh, this little guy right here, 729, 738. That one you're talking about on the hourly? Yeah, I don't see any other 726 unless you're looking over here. 702. Yeah, sorry, Derek. Or Russell, I don't see the extra one you're looking at. I can see this little imbalance right here. That's 728 to 739. Maybe that's the one you're looking at. Different numbers than not what I got. That's okay. Last week's first presentation fair value gap pay. That's okay. You still hit your objective, Russell. If I hope you're in that. If you got that, then Man, what a nice tear. But there's nothing in here that you could have caught that run up unless you were already pre-planned on it going higher. If your stop loss was sitting below the low, it just came down, tapped you out, and then left. So you'd have to be below this breaker here. Yep. Or you could have been in a long time ago and left it sit there and run. Let's just wait for a change in direction here. Then we're gonna, I like this, and I like the first presentation fair value cap right there. This looks like a nice little come back in and tap this and go lower. We hit that midweek. New week trading, new week opening gap, and we've hit that consequent encroachment of that. I'd like to see that hit here now and come lower. I'll take a short right there. Stop loss will have to go up here. If I take out these lows, I'll move to break even. Take a bit of profit there, I'll move to break even. That's a risk-free trade. And we'll let her buck. I'm out. I'm going to wait for a second here. This little imbalance up here. So you pay yourself for that low, move to break even. If it does those come back against you, at least you get a small portion off there. And now I'd like to see this retest here. Come lower. We'll come all the way back up into here. This mean threshold. Close below there. Good. Now I'm going to sell that short again. I'll layer in up to here. Stop loss again. We'll go up here. If I close above here, I'm on the wrong side of that. There's the retest. No, I don't want to see that retest that level. So I'll move my stop loss into here. I don't want to see that go through there. Let's just retest it at once. We start coming back through there. It's not acting the way I want it to act, and I don't want to see it close above here as a continuation to the upside. That's good. Now you can come down. And now you got to see it get back to that first presentation. You don't want to see it waffling around in here either. You want to see it start to accelerate through here. It's got to close below this level. I don't want to see it start closing above this level. So yeah, I'm stuck in this level here right now, this SIBI, hitting the high of it, hitting the low of it, and that's not what I want to see. Right on it now. There we go. I'm going to move to just above here. As soon as I can get one below this, if I can get it close below there. I'm just going to move that one to break even. I don't want to see this. You got to say it can retest this. Once we get, I want to see it take this whole fair value gap out below first. It can come back and retest this, and then it's just too much chop for me. I want to see it start accelerating and get out of here now. So if it closes below here, then I want to see that used as support to go lower and not come all the way back into here. This has been worked now. There you go. Now I want to see that. Come on. Keep pushing. There. Close below it. Now you can tap it and I'll come lower. I don't want to see it run through here again. Because then you got that choppy shenanigans we don't like to see. There's the retest. Got me. Stuff you don't want to see, so prepare yourself for that kind of stuff so then you can just kind of at least break even, and then when it's doing this kind of crap, at least you're safe. You take your money out, or you wait till 10 o'clock for a cleaner setup. But that's just trading off those key levels we're looking for and expecting to see some sort of support or resistance. So now we've traded back above that level. So now we've traded below it, above it. Now I've got to wait now until we see a market structure shift above or below here. This is just retesting this level. Now if we trade below it again, you'll see why you don't get involved in chasing it every time. You take it once and that's it. And then you wait for a structure shift. So when you get into this chop, recognize that you're in chop right now and wait. See, now we've traded below that level again. Below here, we traded above it and below it. Like, how many times have you been above it here now? Once. You've been below it once. And we're just opening below it here again. Come back and tapping it one more time. Let's see it come lower now. And it's one of those the times where, yeah, you see it. But if you would say, I want to buy this long, I want to buy this short, now I want to buy this long, now I want to buy this short again, you would have lost 4 times in there. So wait for a structure shift. Yeah, gold's still sitting inside that premium discount box. There's the premium box. There's the discount box. Bang, bang. That was all in 10 minutes. You ran from premium to discount, and now you're back into premium portion of this range right here. And now you're going to say this one's got to break or that one's got to break for you to start thinking continuation or retracement. We're back to that level again. See how we're kind of banging around on these two levels? Important levels. So you want to wait this breaker here. You want to see that hold price. So this guy's got to hold if you want to see that go higher. Otherwise, bull trap, snap and shut, takes your fingers off. See how that failed? Failed to go up higher. Finally broke through here right there on the close. Came back in, tapped the old lows and inside that level we were looking at and went lower. That's where you start to lose your luster right there. Those two candles or three candles, and that you wanted to see this tap and that go. These two were the ones you go, that's not right. That's not feeling good. And then the revisit again, not good. Then they finally popped through it, said, no, I'm going lower, changing direction. Get back in sync with the market, we're going lower. So now you see this reversal. So a little change in direction, the body trades above it, you come back inside it. Now you want to see this first presentation fair value gap. Get up on top of that and start coming back into this range. And you can't get excited about bullishness until we break through here. So don't worry about that 464.45 level. We saw that failing right in here. These two candles, we talked about that there. And you saw that happen. ES is on the way down, hey? Look at that. NQ says, I'll follow you. There, we've traded below it. Right there, perfect entry. Shitballs. We'll sell that short there. That's a nice short right there. Come back up and give me two more. I'll take two more there. Stop loss has to go just above here. Like to see that hold now, keep coming lower. Oops, shit. I didn't want to still do it. Close that trade. I wasn't supposed to hit six more. Let me get, I gotta get in resynced here. I wanted to take off one, close this down to one so I could take one off here at this low, move to break even, and then so now I added more and it threw off my brain, so I'm out. That's what I wanted to see right there. Pay yourself at that level, move to break even, and this would be a risk-free trade. I kind of screwed that up when I saw more add-on there, threw my brain off. So anyway, discount boxes over here is where I'm looking for. There's the next level. Pay yourself. And you're looking for the discount boxes down in here now. There's your first little breaker hitting this big monster breaker. There's a little SIBI right here. That's box to box. There you go. And I would have been in that still. Oh well. Look at this run. This is going to be a monster run now. I'm not going to wait for here. Wait for this to close through here and come back and access this. So about 19 seconds. We'll see if we can catch the rest of this big run. 10. There you go. Nice little short right there. Stop loss will go just above here. You equal those below you. Look at the higher time frame. Looking for these relative equal lows below us. And this discount box down here at 557, 548, somewhere around there. Move to break even, zero stress trade. Take one off at that level. Take myself there. How's your regular trading hour gap going there? Oh, it's been filled already nicely. Pay yourself, and I'll just wait. If it comes back into here, I like to see right here. We get a nice little wake up into here. This little box right there. It's just 10 o'clock now. Good work, Hans. Good work, man. Took the short at 7:29 a.m. lined up with daily breaker. With the daily breaker. I'd say it lined up with the hourly breaker. And the daily breaker was 25, almost 50% of the daily breaker. It was a 70, just shy of 70% retracement on that whole daily range here. So I still want to see a retest of this level, and then the next price leg lower. But well done, Mark. Looking for 850 or 582. I don't have another trade yet either, Hadi. Yeah, this could be the next dive down. Didn't come back to my level I'm looking for. Wanted to see it come back into this one more time, and this one more time. Just shy of it here. The first one we caught was a good one. This getting thrown off here would have been a nice trade to stay in. Craig, are you participating in this index run this morning? I know this is your first venture into the index world, so I just want to know if you actually caught the run. Lows have been taken here on the 5-minute, and we've now retested this old consolidation here. This is your next box down with Civi, and then the next one down below that's here. I'd love to see that kick back in here and give us our little inside here 5-minute all the way up into here. Unless we close below here on a 5-minute, then I'm looking for this level. How's your oil doing? Moved too fast for me, but my bias was good. So we're using this first presentation now to go lower. See that level right there? You close below it, you come back inside it, continue pushing lower, take out the low, pay yourself there. So sorry you didn't get your long there, Craig. That right there was the key for not acting the way you wanted to act. Got to spritz with your cologne now, Hadi. We're going to be patient, or we'll catch our next run down. Where are we right there? We'll catch our next run, buddy. It's 10 o'clock. So you have an immediate rebalance. This is treated like a fair value gap. So now if we get back up on top of here, I'm not bullish for a while now. I'd have to wait till I see it close below here to go bullish. So this, or sorry, bearish. If we get above here, then we're going bullish inside this range. And you got this target here that we're looking for. This breaker, you come all the way back up into that. That would put you at 50%, I think, of this small little range right here. 50% puts you here. 62% puts you right in the box. So we're right. Let's see how we close just above it there. Now here you tap it. I want to see that come higher now. And we're looking for 50 to 62% in here. And that's it. Keep coming, keep coming. Get through this mean threshold right here, which is that Marky Mark's 3-minute or 3-hour candle. Oh, he says, I measured Monday, August the 11th candle and took 61% of that candle, which lines up with that day's candle. And also the swing that put in the all-time high and breaking structure. You measured Monday, August the 11th candle. Monday, August the 11th candle. The 11th candle. It took 62%. There we go. So there's the continuation to the upside. I want to see the market structure shift above here. If we're going to go higher, I want to see market structure shift above here. You're not looking for a short right now, Russell. I missed you 2 minutes ago. Sorry, that might be an old thought. With that day's 3 a.m. candle. There, now we've closed above that level. I want to see this provide support now and keep pushing higher. Right there, there's the tap. It's a nice little tap. I'm going to put one there. I just want to see if that, using that as precision, and this candle stop loss just below, one tick below that low. I don't want to see that mean threshold get broken now. Yeah. Now I look for both of them. That's got me. Let's see if at this level right here, if I would have taken both of them, I like the last one, so it tells me to revisit back, to get through the mean threshold, revisit back into the SIBI. Now we might see it go higher. Now I'm going to wait for this structure to break before getting in on that, or before, and then right here, at 595. If it closes below that, then I'll wait for a structure shift to catch this to run lower for the next price leg lower. So it's just a wait and see game. Wait for your setup to occur. And that little tap right there, this, as soon as that candle starts coming back in, you go, that's not what I want to see. In threshold, I don't want to see that. Then we look at revisit down here into that immediate rebalance we talked about. That's in there. Now it's running back up higher again. So my stop loss was one tick below that low. If it was one tick below that low, it would have been fine. Both candles. So something to evaluate where you put your stop loss, whether it's on that one candle or both the candles, a little one tick below it. So now we're above that level. Again, we haven't closed above there. We're just sitting right on it. So I'm going to wait. And it may take off now. Just because that's that whole open close right on the high theory that we've talked about many times in the past. I agree, Hadi, wait for your A plus setup. There she goes. So one tick below that low would have been or Hadi's 830. Put your stop loss at it just below his 830 candle. You would have caught a nice little hanger there. This is the one that was, so anyway, I'm going to reiterate this so you understand. This was the entry right here for me to go higher. As soon as you see it take out that mean threshold, expect to see that run on that CIBI again. It comes back into the CIBI. So I waited now, see if we can get above that level, and it closed right on it, came back inside it, and then went higher. So had that closed up right there, then I would have taken that as a long again there. Pull your fib tool in there, look for 50%. See, we're over these two levels already. Now I want to see if this level holds price and we start going higher. Perfect. I got stopped out in the same place as D, but re-entered. Need big green candle now. Yeah. That's some good super confidence there, man. A layer buck. You can run without me. Don't want to chase price, so don't want to show you guys chasing price either, but that's a nice little retest, and let's go higher now. That's right on a 7 candle too. So you have 9-10 turn. So expect this nice little run up into 9-10. Look for that little level right there. A D took one as well. Good for you. I went back for the wickless candle. I should have known better. 774. So there's my first objective. I'd be looking for 678. Don't forget, this is the next bull trap you have to prepare yourself for. That's your imbalance. So the bull trap has to hold right here, has to hold if you want this to come back down again. So that level's got to hold. So if you get above that level, then you're looking for mean threshold and that bull trap to stay open, and you allow you to pass through. You're getting ready, running over sensitive ground here now. This could snap shut and close up on you. So pay yourself there. And the difference between paying yourself here, again, this is just my theory. You don't have to buy into my theory. Anywhere inside this candle, if you don't pay yourself at that candle and it snaps back on you and takes your fingers off, you're going to wish you paid yourself at the trap. Because the difference between here and re-entering again above that, finding a support, is very small, and that gives you more confidence to run to the next bear trap or bull trap. And then if you can get on top of that, then you've got a little more free space to run higher. And all you're doing is just protecting your money to and the likelihood that the trap snaps shut and you've paid yourself. And then you're only losing that distance between there to get in sync again on the other side of it, right? It's like jumping over a puddle. Pay yourself, take your shoes off, jump over, put your shoes back on, and keep going. That's my theory anyway, my philosophy in it. So far this bull trap, you hit it, snap, it's taking, I wanted to see this, but that whole bull trap right there is where you can trigger it. You step on anyone in that, any part of that, and you could quite easily trigger it, and then off you're going. I know we're using the analogy of a bull trap, but we'll see. We're back into this breaker. We've reclaimed this breaker now from above. Now I want to see that push. Start getting through here. Let's go. Go. Good morning, lovely Paulette. How are you doing this morning? I hope you're very well. Hope the family's good. It was a nice trade. Geez, there is a silver bullet. Now your little bull flag people are going, ooh, this looks like a bull flag. We're going to get ready for a nice little wave, and then poof, take off. Get through here, though. I like this breaker to hold. If you want to go higher, then we've reclaimed the breaker from above and start going higher. The bull flag people. Ooh, ooh. Got a couple of really nice trades this morning. So 763. After we get through 727, then 739, 743, 742, whatever. And I'm looking for that 763. Got to get above here for me though. And then the next is today's initial presentation. $10.05 closed above 10.04. 10.05 closed above 10.04. That's why you entered. Okay. Okay. I don't understand the logic behind it, but I'm sure you've got the sound reason for it. I do like the fact that we closed above this breaker again. We went below, we dug into it, then we closed above it, then retested the breaker one more time to go higher. I like that idea. The fact that you used the 10 over the 5, what's your rationale for that? And is that something that you could do every single time? That 10.05, 10.04, like what's your reason for this? Is it just because it closed above? I don't understand your reason for that, Ollie. And I'm not saying you're wrong. I'm not challenging it. I just like to know why what's your philosophy, and is it something you can repeat Or is it just something intuitive you thought, I just need it to close above there and I'm good for that being long? After a retest of that breaker, then if we break it above that level again, then if that's your reason, then I'm cool with that too. After a sweep below, okay, yeah, gotcha. Makes sense to me. See how we're just kind of waffling around inside here now? We're stuck on the level that we like to see, get support at, keep pushing higher. That's good. But now you're kind of bouncing around in here, spending your emotional capital. And I don't see anything inside here except for overlapping candles. This one's not validated yet, this big blue candle right here. It's not validated yet, but this guy is. And its mean threshold is holding price. So that one, I ignore this one right here. I look at this one because it's been validated and its mean threshold is holding price. And then I go, which candle, bearish candle or bullish candle have we validated below? And this is the only one right here. We haven't validated. Oh, this one here, I guess we could say we validated that. So its mean threshold keeps giving way. Look at how many times we work through the mean threshold. And that candle's mean threshold is holding. This one right here, it's been chopped through lots of times. So slightly more bullish than bearish until we get through that mean threshold again on a close. Use it for support, then it'll look like it's coming down a little deeper into this range. That's how I'm kind of looking at it. So I look at these candles and I go, which one's validated? Which one's the highest one? Which one's the lowest one? What's their mean thresholds? What's their highs? What's their lows? And I start to wait for, is that level going to get taken on the downside close? If it does, then I'm looking for another little run back into this range. And what have we got sitting right here? We've got this BISI. We've got that little box we talked about over here that wanted to see support happen. And if we eat through that, then we really got a big dig into here again. Then you're going to wish you paid yourself at that breaker. And there we go. See how we've closed below it already? Now we're running down into here. We wanted a deeper run, and that's what you got. There's the retest. We're inside this little guy right here now. We want to see, is the body going to trade below that level? Pull your fib tool on the whole range from this little swing to that little high there. 50%, that's good. Retest, fill, stayed above this level, good. Keep coming. Now you want to see that go higher. You just want to a little quick run into the discount box there. Fill that fair value gap. I'm all for that. Beautiful. Keep coming. Keep coming. See how we've got through that mean threshold? Now, if we just come back and retest it, that's not a good thing. I don't want to see it roll over here now and come back down again. So watch how this is acting. Say to yourself, is this acting the way I want it to act? I want it to take off now. It's done its thing down here. You don't want to see the retest of the mean threshold, like I said, and then come down lower again. Otherwise, we're looking for a deeper run into this candle. Mean threshold of that wick now. That's it. And right off that support level, we want to see hold. There's 50%. Now go, go, go. Act it the way I want you. Just force it. Damn it, Russell. Tell it where to go. $61 of that leg. That's why it's holding at its breaker. See, now we've got through there. There's 50% again. I think we're coming deeper, 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 deeper. See that bull trap? Got to prepare yourself for the bull trap when we're talking about it. And this is why your profits are getting eaten up right now. And you're saying to yourself, damn it, I over pushed. I aimed for too many PDRAs above me. On the horse just turned on you. And now you're eating up profits, hoping that it gets back up here. And it quite easily could. You know, we start seeing some support off this level in here. You got to come down just a little bit more. There's that marked 3 a.m. candle. We're just touching the 3 a.m. candle. That's 61% of that leg. That's why it's holding at the breaker. Which leg are we talking about, Mark? Give me a time frame. Because if you're talking about this leg, it's only 50%. Let's go, let's go. Next price leg higher. We get into here to here. That'll put you right on the weekly. Right on the weekly new week opening gap. If that's the low, wait for a structure break above here and get above that box. I'm going to be super patient and I'm going to wait for this level, this whole candle here to give way. Of this full 1 minute range, this whole 1 minute range here, that's what you're looking at. There, or are you talking about this whole range here? And you're probably talking about this whole range because that's not 62% either. Yeah, let's wait from here to here. %. That's what he's talking about there of that whole range. It's holding at 62. So you're pulling it from this way and you're saying it's 62% of the whole range. But I'd be looking at it going this way. You can't see 62% of that whole range because it didn't come from the top down. It's coming from the bottom up. So it's not even in 62% for me would be up here, not down here. I see what why you're pulling it here and saying that's 62%, but we're talking about going up now. So I see that totally different backwards than what you've got. Because it's not 62% of the range, because the range has only just been extended down to here. So this push up is 62% of the range up here, not down here. This is like 20%, 30% of the range, 38% of the range of that range going up. Does that make sense? So you're seeing it from the top down, but we haven't extended down. You know, if we're looking from there and this is the bottom of that range, then you say, what, 62% of that range? It's not this small portion here. It's this larger portion over 50%. That's 62% of the range. At least that's how I see it anyway. But if that works for you, Mark, then stick to the method that works for you. I don't ever want to challenge anybody's theories. If they work, then stick with them. Don't listen to me. Don't listen to my thoughts. If it works for you, then pay it. If it pays the trader, pay the trader, man. That's not the one I was talking about, but it works with both ways. Trappy. Know the current highs you draw for your fib from 942 candle to the lows at 958. 942 to 958, 942. This one here to 958. So you're drawing it from here to 958, right? Or 957, it's right on the very bottom there. Okay, from there, there's 62%. I guess you know. So this is the retracement back in there. Okay. I got you, Mark. Now we're on the same page. I love it. I see your 62 holding from this direction. Yes, okay. Got Mark's like, you're making me look like I'm insane or something. Yes, you're right. 62 is holding and not going higher. I'll tell you, Mark, when you get to 60 years old, you start to go, what? It takes us a little while now to catch on. So now we're back below this level. And that's an interesting perspective when you say it's 62% retracement back into a breaker. You can expect often trade entry reversal at that point. So again, pay yourself there. Don't overextend your getting back in sync an hour later with Mark. That's another reason why you got this bull trap and 62% retracement into the range. Often trade entry reversal, pay yourself, and then leave a piece on to continue to see if it makes it through the bear trap or the bull trap. And you want to make sure, it's like we said, this the puddle, jump over the puddle, put your shoes back on and start running. If it doesn't work, then this is eaten into your profits already. See, Mark, if we ever meet, you just got to talk really slowly for my aging brain. You think, just time it, he'll catch up. I'll go for a coffee, I'll come back and you go, oh, now I understand. Now I get it. See how we've traded back below that level again now? We're below it, we're above it, we're below it, we're above it, we're below it. So wait, you got to wait for market structure shift here. Either start taking out this candle or this candle, depending on which part of the range you want to play in, or you want to take out that candle and that candle. So in other words, it's a no-fly zone to me anyway. Hadi, what are you looking at? What do you get from that? Are you getting a similar idea, similar feeling, or have you got a different idea? I like the 5 minute there for there's the premium, there's the discount. So you've gone from discount, you retraced into the discount and went up to the premium. You stopped at the premium, literally at probably 62% of this range on a 5 minute chart. If you take that first one, look at that. It happens to be 62% right on the money. My Mark will get this in a second. He'll understand what I'm talking about. So did you see that nice little pop here above that level? Come back into a discount. Now you can pick up a discount and sell it at a premium at 62%. Pay yourself, comes back, takes you out, you're done. So even if you're on the wrong side of this and you wanted to go higher, at least if you're using take profit model 1, you would have made all the way up to 62%. You would have had 40% of your trade off, and the last 40% would have got paid in profit as well. Again, it's one of those trade models you got to be committed to in order to believe in it, buy it, whatever. Coming back into this BISI now that we've broken it to the downside. So now this becomes important. See if that comes lower now. We're digging into this candle. You're still bullish at E. Looking for the hour. Look at the hourly chart. Yeah, I don't see bullishness in there yet, man. You've already had this big run up in here. You've already taken out these highs, and I have no bull close above this breaker here. There's no bull trade above 658. So even though we've wicked up in here and stuff like that, we still have not had a close above that candle's high. So yeah, it could, you know, in a wicky kind of way, go up higher, but I don't see anything on an hourly chart. Like that's really sloppy that supports going higher for sure. Because right now, if we look at this wick, oops, if we look at this wick, the largest wick here from the open to the high, we haven't even run up to 50% of it yet. From the low to the high, there's 50%. So we've got weakness. We want to see that. I'd like to see that all turn into a wick and come down, but I don't see bullishness, super bullishness in there. I guess you could call it bull because you're still above this mean threshold. But you've been above it, below it, now you're getting back above it again. It's not a strong bull for me. And then you go down to a 15-minute chart. I'm not arguing with you, but D, I'm just kind of, I guess I'm arguing with you. I'm just looking for confirmation. Or 15-minute, see this bullish candle, we've traded below it, and see how the mean threshold is holding price. This is bearish for me on a 15-minute chart. So 15 minutes is not supporting. We do have a bullishness here to go bullish. We've come back into this level, the high. You want to see that get taken out? It does, comes back inside the 15-minute candle, goes higher, then reverses and trades back through this level and trades right into this wick, into this discount box here. And now we're back up above or below, above, below, above, below. So now you have to, for me, you have to wait for a structure break, and they're too far apart to gamble on where am I inside that range. 50% still sitting here. So if you're above that 50%, then I'd say you're 51% bullish. Don't have a strong entry on higher or lower yet. This 5-minute says, look, I can still come up into here at 682 and still be bearish. I can come up into 689 and still be bearish. It's not till I close above 689 that I can start to say, now I'm bullish lower time frame, I'm bullish higher time frame. If we stay above this level, bullish higher time frame, and then you can say, well, your hourly, you can get back in sync with your hourly going higher as well. So you're above here, so that's bullish, and this double confirmation is above here. So you're gonna get through that one as well. And these overlaps, yeah, that's a sit and wait for me. You probably got something there, Hadi, and you got your confidence is I like it. That's bullish right there. That's bearish right there. They're overlapped. Don't have anything just yet. Look at that, right into that level. Just tap it and look at that reaction off there again. Candles closed above this level. Is there anything in here that supports? Right there, maybe. It's too choppy for me. Yeah, I agree, Ollie. That premium wick's just not we're not above the 50% of that wick, so just watching though, how quickly can I be wrong? Now see how we've traded below this? Now above this, come back, find support at that. Now you want to see that start climbing higher from here. You've been above it, you come back in multiple times into this 5-minute reversal. You want to see it start to get some legs, get out of here now and get above that 681. Otherwise, you're hoodwinked here. They've got you hobbled, and I could argue both directions there. So I'm flat until we get something cleaner. Yeah, it's super choppy. I hope that's not talking you out of your trade, Hiddy. I just want you to, if you see something cleaner in there that I'm not seeing, then take your trade, man. Do your thing. I don't ever want to tell you guys that you're wrong, or I look for whatever I look for, and I look for support. I want to support your trades, but if I don't see them, I'm going to say it. I don't see it. That doesn't mean to say I'm right. Okay, so this high's been taken, and we have a change in direction, and we've come back into it. Now you want to see this go lower, right? So now you're saying, why is it coming back into here? Is it digging back into this? We've got this is a change in direction. We didn't get a stop, a fair value gap above. So looking at this mean threshold right here, does this hold price? Okay, and then you're looking at that there, that mean threshold, you expect that mean threshold to hold price unless the close back below here. And you see how we closed right on it? We're going lower. So now you're saying to yourself, all right, so I've got this high, it's been taken. I've got a change in direction, a change in the state of, I look at this as a change in the state of delivery. Now I want to see this run back deeper inside this range. Where am I inside this range? You take this one right here to here. We're looking at 62%. Mark, that 62% is haunting us today. 62%. Now, option trade into reversal. See, it's running back through this mean threshold again. It's testing, it's drilling on this. It tells me it wants to go higher. It's drilling, drilling, drilling. If that holds, we're looking at the last two down close candles here, because these ones are the breakers that took out these candles highs, right? If you look at the most sensitive sucker, he's right here, but we took all the way to there. We've drilled into it once, into the body's highs, or opens. And now the drilling is continuing into this mean threshold. So the drills are trying to get through here so we can bust through into the liquidity above the market. That's how I'm kind of looking at this as a game right now, how it's playing, how it's finding support, and how it's arguing against data points, and why that data point is being attacked. And this one here, you found support at it, and then it just, now you're drilling. Now we're through that mean threshold. Now you're looking for rejection block and or support at this mean threshold here now, and run for these highs. $11 a.m. is coming, my friend. It is indeed. Let's see a big green candle. Chops filled. too much for me. There you go. Let's get some choppy. See how that drilled? It's just, you can see it. It's just so clear. You see it drilling away at that mean threshold. Runs through it. Good. Now I want to get some support. Ooh, here we go. The D's like, I know it. I know it was going higher. Now you want to see this hold. That bull trap is opening and staying open. It's rusted open now. We poured a lot of water on it. It's all rusted. You could have climbed through it. So we went 7 seconds, 8 seconds. Come on. 3, 2, 1. Okay, now come down and tap this. I'll go bullish with you here, the D. So we have not got a body above here yet. So the rule is, I don't want to see, I got to see a body get above here, but I like to see that little tappy tap there. This, I want to see that hold, and I want to see all of this find support. And the stop loss will go just below the mean threshold of this candle. And if I'm wrong, 11 o'clock's coming. See, the fact that we're already drilling into this, I wanted to see that, just tap it and leave a portion open. It's a full fill. That's a D level response, graded response. It's got to go higher now. You see, this one will stay open. Mean threshold. Tap the high of it. Now watch this candle. Is it going to come back down again and give us more shenanigans, or is it actually going to leave right there? Bodies are respecting that level, and you want to see it leave with intent. If it takes all that high, I'll move to break even. I've only got 2 on there, so I'll wait a little longer. But I'll move to break even and let that thing run. So this candle is now validated. I just want to see that high get taken out. You can pay yourself for that high if you want. So now this is another little fair value gap I want to see stay open. This little imbalance, see this little gap up? That's a good sign for me. Come on, run up for that little sucker right there. And I will go to break even plus the cost of the trade, and you can take one out there. I'm going to let it sit there. I'll make $55 if it pans out. But that's the logic you saw explained right there. Now this could come all the way back to tap the high, the open, and the mean threshold, which would take me out. So my fail-safe is if it goes through the mean threshold of this little area, if we're not open to this point here, then I'll close that out. I'll take $300. Give me a tippy tappy. This is like an A+, go, go, go. Don't even come back here. If you still have institutional order flow, just go. Now stop loss will go just above, just below halfway. I don't want to see it come back into more than halfway now. I want to see that go. Now these are precise data points I'm looking at, right? And if it comes back through it, I don't care. It's 11. It's coming up for 11 o'clock, so there's more volatility here. We still have not got above the first presentation fair value gap yet, so this could reverse. So I'm just kind of protecting whatever I've got in here, right? And see how it's not, it's pushed up twice now. Now go, get out of there. You want to see some intention here, right? You don't want to see this just waffling, then come down. and fill this fair value gap, and then I'd have to wait for it to get back above there on a close. There's the 50%. Now I go, I don't want to see it come back to the 50% anymore. That's it. It's done this thing there. Go. Leave. Russell. I'm going to call him my little Jack Russell. Russell, get on that. Send it north. Absolutely want that to hold. And if it doesn't, so it's come back down, filling. Now you watch. See if it fails. See how we close below it, back inside it. Now if it rolls over and comes back down, I'm going to be happy I paid myself along the way. If it runs through there, I'll wait for a retest of this level. And the distance between my getting in and getting out would be from here to here. And if it takes off, it takes off. Then I look for my next area. If I can get above this, find the support, then look for the mean threshold. If I get above that, then I look for the candle, because that's the next bull trap. This first presentation. So we're into the mean threshold of this candle now. There's also that new week opening gap. Look at that, right back to the candles open. That's demanding too much. Demanding a lot of precise level, and it just came down to that level there. Inside that range, inside that candle. Oh, look what I did wrong. Do you see that? Missed it. I was looking here when I should have been looking back at this here. Remember? Jeepers creepers. I can catch myself. I'm like, why did it come back through there? Here's why. Look. That last up close candle from low to high. Look at it. Or from the body low to the body high. I just want the mean threshold or the equilibrium. Look at that. There's equilibrium of that candle. It closed above it. That's got a hold. It held. I went there. It was there. Should have had my stop loss there. It'd still be in this. That's why you got to be very, very careful at where you put your stop loss and look for your data points. I was looking at the wrong one. Right on the money. How many times have I told you about this bloody mean threshold of this last up close candle and how important it is? Once we trade above it, come back. Look at that. Literally came back to it with precision and kept going. That would have been an entry for a long, not an exit for a long here. Dang. Okay, I see where I went wrong. I see where I went wrong. So now we're looking for the same thing on the other side. Does that make sense? We're looking for the same thing that we're looking for here. That's the next bull trap. You want to see it go. So when the bull trap fails, you want to see its mean threshold hold, or both of them together if you want. So there was 2 times I got that long that I stop loss was too tight and the stop loss was in the wrong place for that. Gotta figure out where you go wrong, man. I have to put that as a screen capture. That's a good screen capture and a review of stop loss placement. That'll be in my trade journal today. Was long to that premium box. Good for you, Russell. Nice, nice. 7:47 macro time. Here's the macro time. Mean thresholds holding. You've got this SIBI on this side. You want to see it's got to break through that. If it just comes back to inside it and uses it as support to go lower, then reverse. There's the reverse, change in direction, going lower. If we take out this, look for another run deeper into this range. That'll be the first little tiny market structure shift, and then see if we start running down all the way back into 655 or sorry, 669. If we break this, I'm looking for 669. You got to get back through that level of 713. It's macro time, be careful. There's 50% right there. It's 722 of that wick. We're just under it. You get back up on top of this, look for 722, which is right at the top of that fair value gap here, the SIBI. And we'll see if we close above that. Now I'm looking to see if we get some sensitivity off of this level right here at 713. This is our BISI. We're trading back into it. So the high of it is 713. The consequent encouragement of it is where we're hitting right now. So we'll see if it's tapping right there at 713. See how we're digging through it. Looking for 722 now. We have 723. That's the top of SIBI. They got their little imbalance, so you could technically include that up to 728. I'm just going to see because that's also the wick, 50%. The close of this, there's a tiny imbalance there again still. Now I'm just kind of 11 o'clock. Wait for a little structure break. $728. See how we climbed above that level now? We just came back and tapped it at 728. Or 723, I should say, this one right here. We closed above it again, came back, tapped it, keep coming higher, get above that 728. Now you don't want to see it drop below 714. This little candle right here. Come back, tap it, and 3. Equal highs. Fair value gap above the high. Leave that open and go. If it comes back through it, look for a retest of that candle. Look at that, right into the consequent encroachment of that BISI. Are you going to fill it and tap this guy or what? Right there. Come back and give it a little tippy tappy. I'm looking at that halfway through the wick. The whole thing says 1, 2, 3, 4 levels on that one candle. So you want to really see it start get out of here. This whole just waffling, sitting here, candles while it's trying to just make up its mind what it wants to do. What you want to see. Let's see if we can get back into that candle. There she goes. There's the tap. There's the mean threshold. See, there's the first one. Tap the high. Mean threshold right there of the wick. Now you can leave from here. If you come back into the body, the open, now the mean threshold. You just came back into that BISI. Gotta leave from here. Gotta get out of Dodge. You're right in that mean threshold. You don't want to see it come back and retap. So watch how it acts here. You want to see that leave from here now. Coming back down, revisiting, not what you want to see. If it goes through it, then look for a revisit down here. We're through it. Last breaker that takes out this high. I'm looking for a retest on the first presentation fair value gap. We're right there at 709. And it's 11 o'clock. Nothing to annoy you long people. Then take out this low here and use this as a market structure shift. Keep coming lower. And take a run on liquidity at 10:30. There's the retest of the SIBI, this immediate rebalance right here. And then let's see if that goes higher, takes out this 722. Took out one, took out two. Back inside this one. Watch at 722. 720 to 722. You have to include the imbalance. All of this is, it's got to close below this level and below this first presentation fair value gap to start thinking about running for a market structure shift. We just traded back up into this little imbalance right here. Lower. Again, hitting this discount box to box trading. If you look at the small range, we've come down into the discount, back up into the premium, back down into discount. So it's a very small range to be bouncing around in. If you look at where you're sitting in that, see how you're like discount, premium, discount, just below that 50% range. That's discount, premium, discount. Oh man, I gotta go to the dentist in a few minutes again. One of my crowns is one of the fillings in my crown. I have to do a root canal through my crown. Very expensive, by the way. Get the root canal done first, then get the crown. Always drill through the crown, and then they have to fill the crown after the fact. So then you got to go back in, and years later, when that filling is starting to fill, and then they got to drill it all out and start again. So here we go. So we come back up into the premium level. Now we're dropping through this little discount area here, through the mean threshold, come back, give that first presentation a little tap now before extending the range. Right there. Now extend the range. You're still inside this right here. You can allow that there, mean threshold. And if you start to trade back through here on a close, then you're in that waffling thing. You have to wait for a structure break. Right now, I'm still bearish from that point right there. If you get above that level, different story. So you're looking at this candle and that imbalance right there, or this immediate rebalance, I should say. And I'm looking for that to keep coming lower. If it takes the mean threshold of this one up, this is the bull trap I'm expecting to hold price. and send it lower if this fails. Rejection block, pay yourself. If you're there to there, it's maybe a small thing, but you pay yourself there. Move to break even and let it ride. Now you got a stress-free trade and let it go. You've already got a little bit of money. You've got pocket money, and let the trade run. If this tears off out of here right now, you're gonna be like, oh man, I got a perfect entry. I got to zero stress real quick. All is good. Now you want to see a body get below here, not just a wick. That's why you pay yourself at rejection blocks. We start getting through the mean threshold of this, you get up on top of this, then we're back into that scenario, running back inside this range again. So you'd be out. Paid yourself there. If you were on the wrong side of this, you paid yourself right away. Now you might not like moving your stop loss that quick. You might say, nope, that's not my kind of trading style. Then that's fine. I'm just focusing on data points. That's all. You decide whether or not those are trades for you. If it aligns with your trade setup, great. If you're looking to go short and your stop loss is sitting above that high, then you're still in this. I want to see a body get through here though. This would have been a fail safe. You paid yourself there at the rejection block. Stop loss would have moved into break even plus the cost of the trade, and it would have taken you out. So now you just sit and wait. You want to wait for a market structure shift now to confirm that you're going to come lower. Because if this rolls all the way back up into here, wicks up into there, still stays a body below here, then you're in consolidation. Welcome to lunch. So far, no bodies getting above here at 709, 708, 709. There's one gap that measures up to the net. We just deleted his message. See now how we're literally on top of that fair value gap, the first presentation again now. We closed above it, tapped it. Now you're back inside this one. So this bull trap you want to hold if you want to go short. You're back inside this smaller range now. See how you're starting to compress now, right? So you're in between this one. That just taps there, rolls over and comes back down, takes out this again. You're above it, you're below it, above it, below it. So you have to wait for a structure break. And you see why you pay yourself at rejection blocks? All your profits are getting eaten up now if you hadn't already paid yourself. You didn't get the low. You did get this though. What are we doing, Adi? Where are we going with this? Still bullish? Look at the daily. Look at your daily chart and tell me where your upside objective is going to be. I got an upside objective. Yes, 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 Adi. You're the man. What's the high of that candle there? 804.50. 804.50, my friend. That's where we're looking. We're above this level. Come back, give it a kiss. Right there. A little kissy. Start heading higher. That's a previous day's high. No, that's not a previous. You're on a different chart. 804 is a previous day's open, unless you're looking at previous day's high, like August 11th high, then yes, that's what we're aiming for, August 11th's high. And then you're looking for August 25th's high. And then you're looking for August 25th, August 19th, and then August 18th. See how each one of those hits all three levels of that SIBI, that BISI, that inversion. 804 is 11th. The 19th is the consequent encroachment, and the 18th is the high. All three levels. So we're looking for the 11th as our upside. Look at that. You had a perfect entry right there. I gave you another perfect entry. Now let's get above here. That's a previous day. Sorry, it's a previous 4-hour high. Been a fun day. Love you guys. It's been a good day, yeah? Stay on the horse, man. Stay on the horse. No body above here yet. Let's give this a little tap here. So we open and close right on it. Jeepers. I love you guys. I love you guys. You've got some great people in here. And I don't care that we don't need to get 25 people. Who cares about thousands of people? If they don't see it, they don't see the logic of this and the precision levels that we give you. Dang, man. Did you catch that long there, Hadi? From there to there? Pay yourself with a rejection block. Quick little entries, man. They add up. They add up. I'm happy with the guys we got. Quality, not quantity. I agree. I agree. Good run, Hadi. Good run, buddy. Quick little nibble. That's all he needs. 19 to 30. That's like 21 handles. Nope. 11 handles. Sorry. My math's not that good. 11 handles. Better 11 handles in his pocket. Now he just waits for a market structure shift again above the high. Give us a little fair value gap here, and then our graded response. Come back, give that a little tap, or I put that at 50%. That's not, you won't get 50% with it now. It'll have to be a full fill. But anyway, a nice little punch up here, fair value gap. Even that at halfway would be perfect. Like big bold candle here, get through, creating 50%. This at 50% of that candle. The candle's body, come back, tap it, and go. And then start aiming for next high, rejection block, next high. And then the regular weekly imbalance. Oh, I think that's going to be it for me, you guys. I got to go get ready to go to my dentist. Thank you so much for tuning in. It's been a fun morning. Hopefully you've caught ups and downs. We've given you runs up and we've given you runs down. We've given you holds and catch a new run higher. We've given you lots of cool, awesome trades today. So I hope you guys saw them. I hope you saw that level of precision. When the markets are a little cleaner, you can see some level of precision. That's what we wanted. Remember, we want a bigger candle? Yeah, that's it. Put that one right at 50%. I want to see this thing get like this. So here's how you reverse engineer this. That's the body. You want to see this end up creating a body, right? I want to see a body end right there. And the next candle come down, tap that, hold that. Okay, don't get too excited now, slow down. So we get a fair value gap, come down to here, created it here. And then that little tap right there, leaving that little piece open, sends it higher. And if it doesn't, look at this consequent encroachment here. There's the big bold candle we're looking for. A little bigger than I was expecting, but whatever. Now this one can come down here. This is the candle we want to see it create our fair value gap now. This isn't it here yet. We'll wait till this candle's finished. And then if this is 50% right there, then we should see this candle come all the way back down, stop here, the next candle open, come and tap that, and then go higher. How's that? $747. That'll hit your 747 level. Good work, man. Good call. There's your fair value gap. Okay, so what are we looking at here then? From there to there. 50% puts you right here, right on top of that fair value, that consequent encroachment. Bye. Bye-bye, Miss American Pie. And we're going to be just one tick below here. Gotta leave from here. Let's go. Don't hang around. Okay, that's it. I'm good. And we'll see if we come back through this breaker. I don't want to see that all fill in. Obviously, I want to see it leave from here. That's my graded response. I'll take my stop loss out if it breaks below here. If I see it drop below there, I'll close out my trade before it takes my stop. D-level response. Full fill, not good. Don't want to see that. But it has come back and tapped these old highs. So come on. I want to see you get some legs out of here now. That's the delta level response. Now I don't want to see that get any lower than that. I got to stay below the mean threshold of that candle. Anyway, that's it for me. That candle right there is my line in the sand. If it takes me, it takes me. I've been happy with that little runs today. So thanks everyone for tuning in. took me out. Okay, so there's the change in direction, 11.16. Now wait for market structure shift or a retest of this into this range. 747. Look at Hadid, hey, nailing that. Good for you, buddy. Well done, well done. And we'll see you guys live tomorrow. Thanks for tuning in, and all the best. Take care. Thanks for tuning in. Subscribe, like, you know all the usual. Thanks.